This is the Stock Day Podcast, sponsored by OTC.Watch, where investors go to find big data on small companies. That's OTC.Watch. Subscribe to us on iTunes and YouTube to stay up to date on penny stock news and interviews. Public information on OTC, pink sheets, and microcap stocks from around the world. Here's your host, Everett Jolly.
On today's show, I'm bringing back a returning guest. Last time he was on the show was back of June of last year, and I'm talking about no other than Pro-Dex Inc. You can find them on the NASDAQ under the ticker symbol PDEX. Pro-Dex is a product development company. They develop proprietary designs under exclusive supply agreements with some of the largest companies in the world. They design, they engineer, they manufacture, and they do it all in Irvine, California. Here with us today to bring us up to speed is the CEO of the company, Mr. Rick Van Kirk. Rick, welcome back to the show.
Thank you very much. Very happy to be here.
You know, the times that you come on my show is usually when you guys release your results, financial results, and that mentioned they just went out here about 4 days ago. So let's talk about the second quarter results. What are your thoughts and on the thoughts on the quarter?
A lot of thoughts, actually. We're pleased with the quarter, and particularly the top line. I think it's reflecting our overall growth. We're still trending towards year-over-year growth. We've exceeded last year's numbers at this time in that regard. You know, the net income is pretty consistent with last year. We've got some challenges, you know, with our margins and gross profits and things that a lot of people are working through, and some are unique to us, but should be solved in the next several weeks or months. We have, you know, quote unquote supply chain issues like so many other companies.
Absolutely.
Components are scarce or more expensive. So that, you know, you just got to muscle through and deal with it. But we've got a couple other kind of unique things that, while they're challenging, they're short-term and ultimately resolved. We have a very large customer that launched a new product in the summer, and they, late in the game, kind of requested a significant change, which normally would add a lot of cost and change the price. But instead of kind of holding out and figuring out pricing together, we agreed to do the work and help support that launch and work out the pricing as we go. So that affected quarter number one and quarter number two. They're a big company, so those type of exercises just take a while. But we expect to get that resolved, you know, hopefully during this quarter, and that'll kind of restore a little bit of balance to the increase of top line and bottom line, if you will. And there's just some interesting accounting things in terms of the new building that we're getting ready to commission in terms of validation builds and how does that apply to your absorption and things that affect our margin. And then we're close to getting beyond that too. So I'd expect going forward that we'd see more of a similar increase in the bottom line as the top line goes up.
Well, let's talk about that. Give us the status on the new building, and why do you think you need one? Well,
I'm really excited. We're moving in 2 weeks. And we need one just to support the growth that we've had and we anticipate. You know, we're not shy about our growth plan. We've grown out of the building that we're in now. It's very crowded here. So we're kind of exceeded the capacity here, or very close to. So we need to get into the other building and we've got a nice new clean room there. We can expand the building. We're here in Irvine and increase our machining capacity to keep up with some of the growth. We've got a couple projects in development in terms of answering your question why we need even more space, that some will go into production into the fourth quarter of this fiscal year for us, and another one, you know, in the next fiscal year. And we've got a couple other proposals we're negotiating actively on. So we see some growth. We see the new building is a chance for us to increase our contract manufacturing side of the business as well as the technology side. So we're really ambitious and just anxious to get in there and start working on some of this stuff.
You know, the landscape for a lot of business, not only in California, but everywhere, it's been rough. They've been laying people off. They think that we're in a recession or going into a recession. Last count that I saw, that you had about 130 employees at the company. How is nutrition at the workforce right now?
We're actually up over 140 now. We've got a lot going on.
Yeah.
Yeah, we've got a busy production floor and the support group for that. We have, like I said, a number of projects in development, and then we've increased our R&D spend a lot over the last few years. We've got a lot of, as we get more and more contracts with large customers, a lot more regulatory requirements and things to support there. And the new building actually is requiring some additional headcount. So we've actually increased headcount, and it's a nice challenge to have, to find good people and try to maintain the culture that we like here while we grow. But so far, it's been going pretty well.
This year, your run rate will be around $45 million. Your PE ratio is about 15.4 compared to your peers that are in the surgical medical manufacturing industry, around 33.5. That being said, when we talked about it many times, where's the growth plans in your company at? M&A, getting boots on the ground, getting more contracts, doing more repairs. Where are we at on that?
We are progressing. We had a really substantial run rate or growth rate for a few years there. I'd say we've kind of gone from running to jogging or walking now because we've spent a lot of time and focus on this building, frankly, a little longer than I thought it would be. But while that's been going on, all those other fundamental things that you mentioned are in place, whether it's new proposals being followed up on or increasing the repair business, increasing headcount. So while there's a couple struggles that we just mentioned a couple minutes ago, we're still moving forward. We're still progressing, still have the same aggressive growth plans. Again, we've anticipated year-over-year growth this year as well, despite all those challenges. So it's tracking. It's going the way that we hoped. It's kind of the walk before we run again phase, I guess I would say. But very optimistic still, excited about the building, excited about some of these projects, just really kind of chomping at the bit to get going on them.
My guest today has been Rick Van Kirk. He is the CEO of Pro-Dex Inc. They trade on the NASDAQ under the ticker symbol PDEX. This is my personal opinion, and I'm entitled to it. Stock's trading at $16. Very, very undervalued. I'm putting fair value at this stock between $25 and $40 a share in the next 18 months. Everybody should do their own due diligence. Rick, I'm going to give you the last word. What is it that you want my listeners, your stockholders, to take away from today's interview?
Well, first, I appreciate your comments right there, and I don't disagree. I feel we're on the verge of kind of busting out here because everything is starting to come into place. And again, I'd like to always thank everybody for their interest and support, especially as we're going through some of these challenges. I think we're doing a good job of maintaining good results while we go through those challenges. And like at the risk of repeating myself, very excited about coming months and quarters and years. I think the work's going to come to fruition and everyone's going to be real happy.
Rick, I want to thank you for stopping on the show. You can come back anytime.
I appreciate that. I'd love
to. This program is entirely sponsored and produced by La Jolla Media, LLC, which is responsible for the content. The opinions and information provided on this program are for educational and research purposes. Stock Day encourages all listeners of this program to do their due diligence and research when determining investment strategies that will work for them, or to seek the assistance of an investment professional.